What's up, traders? Hope you're having a good trading day. It's been a little slow today, to be honest, but this is the day for research and shooting the bull about what other big names are doing. And on Discord today, we were talking about Bill Ackman, and he's one of my favorite investors because he's a well known contrarian. And a few days ago, when we had this big down move on the market, he bought Netflix. He's big bullish on streaming. He likes it. He's probably wanted to get into the company for a while. And so it got me to looking at it, not just because Bill Ackman is into it, but it definitely does bring it to the forefront. We all know what Netflix is anyway, it's a household name. But do I like it in my own personal analysis? Well, let's take a look. Right now, it does seem to be having a recovery. But let's take a step back. Let's look at the broader picture. And that means going all the way out to the monthly time frame. How many of you guys actually use that? So if we take a look from the high that it made in November and go all the way back to the low of 2012, it comes down to a level that if you watch my content, you know that I rely on, which is the 50% retracement. So right there, it's very, very clear. That's where it actually dipped to, as a matter of fact. And what we also have going is a little bit harder to read, but we've got a nice little inflection point right here. I like it how price comes out of this range, dips to hold it, and so there now is where we are today. We got back above it in these last few days of price action. So those are the levels of play. Now, again, I like to try to zoom in like a scope on opportunities to lower that risk with the higher reward. And so in this reaction level off of this low, we also see where price has done the same 50% retracement right there at that level. So I kind of like it. I like this for a low risk, high reward trade, long term. We're not talking about weekly expiration options here. This is good for a long term play because what we can do is we can look at it from this perspective. Let's say that we pick up the shares here. Now, of course, options are going to have a different sort of risk profile. But if we assume that good little target is to get back up to the high right there, we can say if we break the low that it made on earnings, then that could be a mass capitulation event. That's where the people that bought in there are going to start suffering a lot of pain. And so we could have our stop down there. I know sometimes they like to take stops and whatever the narrative is, but this at least lets us define our risk now that we've had that little hint of bullish action off of this low, which came at a decadal support. So I like this trade. Hashtag this is not financial advice, but this is the sort of thing that I look for on dips like this. I'm not trying to buy it at the bottom. I'm not trying to scoop it up and buy the dip immediately. I think a lot of people have run into that problem, just to talk about current events, with Facebook, which, as a sort of little anecdote, on this day when it came out, I had 3 messages from people on my phone asking me if I was buying it because Facebook can't go lower. Well, we don't have that reaction yet to the big earnings crash on Facebook. It's still trying to find itself a bottom today as I make this. Whereas with Netflix, we can be patient and now we have something to go on. So that's really what I like to see. I like to see this little reaction come up, find a level where it may stall out that gives us a good risk to a higher reward for the bigger, broader picture. So look for that. Whenever you see big dips, don't go jumping in right away. Wait for an opportunity that lets you define your risk. Otherwise, you're just a bag holder, and we don't want to do that now, do we? So that's a quick video for you guys today. I'm going to be releasing a longer term video this week with a very, very important trading technique. And so be watching for that. We'll see you guys in the next one.